one man we're watching, his moves full of clout. Some call him evil, some call him foul, but I just smile and call him motherfucking Daddy Powell. Will Jerome Powell nuke the market again? With a flick of his wrist, make fortunes disappear in the wind. Wall Street's a jungle, lions on the prowl, but the king of the jungle is old Daddy Powell. Old Daddy Powell, old Daddy Powell. Every single time, it's like a fucking roller coaster. Daddy's gonna be Corey, so hold on tight. Daddy Powell, don't bring me down. The numbers are flying, red, ink, and green. For some it's a nightmare, for others a dream. Degens are crying, theories disavow, all bending the knee to mighty Daddy Powell. Oh, Daddy Powell, Daddy Powell. Every single time, it's like a fucking roller coaster ride. Daddy's gonna be Howie, so hold on tight. Daddy Powell, don't bring me down. The Bulls and the Bears are locked in a fight. Who knows if we'll feast or starve come the night? With a glance at the screen, I let out a howl when I see that old motherfucker, old Daddy Powell. Every single time, it's like a fucking roller coaster ride. Yeah, it's gonna be crazy, so hold on tight. Daddy Powell, don't bring me down.
Oh, brother, oh, brother, oh, brother. We are back with a little bit of a double feature specialty, folks. Jerome Powell, Mr. Daddy Powell himself, the guy who controls our money supply, is about to be talking to all of us. It's going down in about 6 minutes, and we're going to find out which way we are rippity-skippity-doo-dying. I don't know. We're going to find out if it's good. We're going to find out if it's bad. Right now, the market, it is a bit green here. For some reason, I cannot bring my charts up. Where are they? There they are. Yeah. SPY is up by 0.08%. The Qs are up by 0.3. Bitcoin is currently trading at 104,000, down 1% on the day. Palantir's in the green. Meta's in the green. Broadcom. Actually, pretty much every major tech stock is in the green, except for old Tesla, which is a bummer because I have a long position on old Tesla. But as we're speaking, the SPY is about to make a new intraday high. You're probably going to hear the alert go off. The Qs are about to hit a new intraday high as well. On a daily time frame, Meta's getting a big technical breakout to the upside. So is Broadcom. Nvidia's looking good. Even MSTR is trying to fight back. Like I said, things were a bit rocky this morning, but around 10:15-ish, things turned around, and we are now seeing success being found by the bulls. The opening 45 minutes was a bit rough, but here we are. The bulls are now kind of showing us what is up. So will it hold? I hope so. I have a shitload of calls that I would love for the market to rip and rip and keep ripping and keep ripping and keep ripping. We'd love for that to happen. Did not have good luck on my Apex accounts. those ones all got blown out. So we're going to have to restart that tomorrow and see if I could pass some of those tests. I basically held that short way too long. And then when I flipped it long, that's when it took a dip midday around 11:30. So I basically got chopped up on both sides. So I right now don't have any futures positions on. But remember, most of my money is in options as of right now. And most of my options money is on tilted long calls. Actually, how are those bad mamma jammas even doing? How are those bad mamma jammas even doing? Okay, they're doing decent, up about 13,000 there today. My big winners right now are Broadcom and Meta, up 62 and 45% respectively. Tesla, I was up big, but actually now I'm down 60% on it. That sucks. And I would love if the SPY and the Qs can just keep going. I do have time. In fact, I have plenty of time. I just really need this stuff to, I don't know, get a little bit of fire under its ass, and ideally we can get going from there. But all right, let me get ready because we are a couple minutes out now. Just because we aren't going to have enough time right here. You can see SPY, new intraday high, Qs are about to get it. Very quick shout out to today's stream sponsor. They were this morning and then again today. Public, if you're an option trader, an aspiring option trader, this is the place for you to be because it's the only brokerage I know of where you can earn a rebate every single time you trade. Doesn't matter if you're buying or selling. Doesn't matter if it's a call or a put. There's no commission fees. There's no per contract fees. It is free to download. It is free to sign up, and you earn a rebate. You earn money every single time you trade a contract. Once again, doesn't matter if it's a call or put, doesn't matter if it's buying or selling. In my humble opinion, that makes it the best place to be an option trader because if you're profitable, you'll be more profitable. If you're not profitable, well, at least the sting will hurt that much less because at least you're earning some money every single time you trade these contracts anyway. And the way they do it is by splitting the payment for order flow with you, the trader, the investor. So check it out, pinned to the top of chat in the description of the video. Make sure you use that link because you'll start off at a higher rebate tier. There's 3 or 4 different tiers. So if you want to start off at a higher one, use that link pinned to the top of chat and in the description of the video. Obviously, a shout out to Public. And on that note, let's take a little looky-see at the markets here. I will remark out a new high. We're also going to go to this. The Qs haven't hit the new high yet, but not that far away. So I have a potential breakdown alert and then a fresh high alert. The big winners of the day, like I said, have been kind of these two guys right here. Meta, which is looking strong, up 2.6%. If you look at the daily chart right here, we also have a nice technical breakout from mid-May. My next stop is potentially all the way up here at 680. So I'm watching that on Meta. Meta looking very, very strong. And then obviously the other big winner of the day is Broadcom. Intraday not doing too much. Obviously it had a nice gain of 2.3%. But looking at the daily, once again, another nice continuation on the technical breakout, potentially almost at a new all-time high. So definitely watching those guys. And even though it's doing good, Palantir recovered, new all-time high there on PLTR. Not as strong as the other ones on an intraday basis, but nonetheless, it is a new all-time high. NVIDIA holding its own inside day, not really trending. Potential bottoming formation on MSTR. Would love for this thing to get back above 400. That would make me very, very happy. And then other ones, I'm just seeing a decent amount of green. Netflix, another new all-time high. So we're seeing that there. Amazon putting in green, but hasn't been moving the most. So I would say overall, the bulls as of this moment on the short and even the medium time frame, the bulls are in control. But as of now, it's not that like phenomenal bullish day, but who knows? Maybe Powell's going to say the right stuff and this thing's really going to get going. From a daily chart perspective, what I'm looking for is either the breakout or breakdown of this trend, of this pennant, like this triangle. So either looking for SPX to take out roughly 59.40 or to roughly break down below 58.30. So about 110 point region. And that's what I'm waiting for. I'm waiting for that breakout. I'm waiting for that breakdown. Now, just to be, I guess, forthcoming with all of you, I am already biased to the bullish direction. I have a lot of calls and everyone in the Discord knows that. So I hope it goes. But if we start to break down, I'm not married to the position. I will very, very quickly switch to the other side if we get that breakdown. But most of the time when you can see consolidation, this doesn't work all the time, but the odds suggest that when you consolidate, you commonly break in the direction of how you got into the consolidation. So that's basically my play. And we're about to get underway. So let me turn on the audio here for all of you.
Hi.
Hi.
Welcome all to the 75th anniversary conference of the International Finance Division of the Federal Reserve.
Fancy.
It is a great pleasure to see so many familiar faces and friends. 3/4 of a century ago, the IF division was born out of the recognition that in the post-war era, the U.S. was going to be at the center of the economic and financial markets and currency of the economic world. Given this, understanding the international forces that affect the United States was becoming vital to meeting the Federal Reserve's domestic mandate of maximum employment and stable prices. To have a deep understanding of these international forces, trade, the current account and financial accounts, foreign inflation and growth, commodity prices, the dollar, was not going to be easy. The division was going to need to attract exceptional talent, to conduct exceptional analysis, and to develop exceptional tools. And it needed to be able to deploy all these assets
Breakout,
to support the
new
FOMC
intraday high.
in understanding and responding to cyclical and structural developments, as well as international crises. This conference is a recognition of that achievement. Today and tomorrow, we will celebrate the exceptional accomplishments of the IF division. We will celebrate the dedicated staff who have contributed to the rich and inspiring environment, some of whom have stayed their entire careers here, becoming leaders at the board, and others who have become leaders in academics, in business, and in policy institutions around the globe and within our own system. Through the academic portion of the conference, we will celebrate the vital importance of research on topics such as international finance, international open economy macroeconomics, and international trade. This research and the intellectual rigor it brings to the analysis and the model building of the IF division is critical to achieving the division's and the Fed's mandate. We will also celebrate the sense of mission and collegiality and friendship of the staff throughout the decades that make it such a delight to gather here together today. There is no better person to kick off this conference than Chair Jay Powell, who from the start of his tenure at the Federal Reserve Board has been a supporter of the International Finance Division. The chair has long recognized the pivotal role of the U.S. economy, financial markets, and the U.S. Central Bank around the world. He is a remarkable and respected leader among his peers across the globe. Please join me in welcoming him to the podium to open what is sure to be a wonderful next 2 days. Thank you.
Woo! Woo, woo, woo! Daddy Powell, pump the markets. Pump the markets.
Thank you, and thank you, Beth Ann. I guess I'd like to start by offering my condolences to the family and friends of former Vice Chair Stanley Fischer. Stan was a colleague of ours here at the Fed and a giant in the field of international economics. In addition to reaching the highest levels of the field in his own right, he was also a trusted and generous mentor and a teacher to a generation of the most important economic thinkers, including many heads of global central banks, advisors to presidents, and countless economists. And I know all of us who knew him will miss him. So, congratulations to the Division of International Finance, IF, in these
Better
parts,
volume.
on 75 years of outstanding work in service to the Federal Reserve Board and, by extension, to all Americans. Many current staff members are here to celebrate today, as well as a significant number of IF alumni, including past division directors Ted Truman, Karen Johnson, Nathan Sheets, and Steve Kamen. The division has also produced many other notable alums, including, not least, Chair and Secretary Janet Yellen, Professor, author, chess grandmaster, and our keynote speaker Ken Rogoff, and humanitarian and economist Albert Hirschman, famous for the Herfindahl-Hirschman Index, and more recently, perhaps a little less famous, as a character in Netflix series Transatlantic, to name just a few. We keep close track of these things. In my time at the Fed, the IF division has provided invaluable insight into global economic activity, international trade and capital flows, and developments in foreign financial markets. Division staff have also played a key role during episodes of global financial stress. And your research and analysis are critical inputs into our monetary policy decisions. Thank you to all that have served in this division over the past 75 years. Today, I'll kick off this conference by briefly reviewing why the division was created in the first place and highlighting a few of its many accomplishments over the years before turning you over to a robust set of presentations and panels. So, the IF division was created on July 1, 1950, but the idea began to germinate a few years earlier. The U.S. had emerged from World War II as a global economic superpower. The Bretton Woods Agreement placed the U.S. and the Fed in a central position in the global economy. Our mission then, as it is now, was to serve the American people. But it was clear at that moment that the Fed needed to have better knowledge of global developments to achieve our dual mandate goals. A 1948 memo proposing to create the division stated, quoting, "Problems of international economics and finance have become increasingly large, complex, and significant in recent years, and our foreign economic relations will undoubtedly continue to give rise to issues of the first magnitude." That rare economic forecast that has turned out to be spot on. 75 years later, it remains critical that the Fed understand the policies and practices of other governments and central banks and their implications for the U.S. economy and for financial markets. Exchange rate policy, of course, is now firmly in the hands of the U.S. Treasury. However, the end of the Bretton Woods era in the 1970s fundamentally changed the conduct of monetary policy, as policymakers had to understand the effects of potentially more volatile movements of the U.S. dollar on American families and businesses. Understanding global trade and capital movements has only grown in importance since 1950, as we saw during the pandemic.
Pushing new intraday highs.
IF helps produce the data on international capital flows and has spent decades researching the effects of these flows and international trade on U.S. and foreign economies. Understanding this complex and interconnected web is essential for us to anticipate the path of employment and inflation. Another important development in the 1970s was the increasing use of macroeconomic modeling, which greatly influenced the division's work. Under the direction of former division director Ralph Bryant, IF developed its first multi-country model. Always on the forefront over the years, economists in the division, many of whom are in this room today, developed increasingly sophisticated models, with each new generation expanding the capability to tackle the international risks and issues of that day. These models have proven useful for understanding how international shocks transmit through the economy and financial markets, for assessing risks and uncertainties through alternative scenarios, and for better comprehending the implications of various shocks for the U.S. and the global economy. The results have informed research papers, board memos and briefings, as well as the risks and uncertainty assessment that FOMC committee participants receive in advance of every meeting. The IF division has also played an important role in responding to global economic turbulence. A prime example is the Latin American debt crisis of the 1980s. That episode required analytical thinking about the macroeconomic repercussions of the crisis as it played out around the world. Work by the division and by the IMF and other institutions led to the establishment of emergency facilities to prevent more dire financial outcomes. As global capital flows increased, other episodes of financial distress surfaced across the world, including in Mexico, Asia, and Russia. International capital flows and spillovers became and remain a recurrent feature in the division's analytical and monitoring work. The expertise generated through study and response to these global challenges proved invaluable when stress hit closer to home during the global financial crisis and then the pandemic. Both of those events required immediate, broad, and in many cases unprecedented responses to avoid disrupting the availability of credit to American households and businesses. The nation and the world looked to the Fed to lead in these moments. During the global financial crisis, when global funding markets came under stress, IF worked to establish swap line arrangements with several major central banks that helped restore stability in U.S. dollar funding markets. And of course, during the pandemic, IF division helped lead efforts to expand the provision of dollar liquidity by setting up the FEMA repo facility. These periods of acute financial stress and uncertainty prompted the division to develop new tools and analytical products that could be used to understand and respond to the events unfolding on the ground. For instance, the division has devised new methods to measure and assess the effects of various types of uncertainty on economic activity, including new indexes that were built to track geopolitical risk, inflation, trade policy, and economic uncertainty. As we continue to navigate the current period of heightened uncertainty, this work is critical to understanding the quantitative implications of uncertainty shocks, certainly relevant today. So I'll conclude by saying that for 75 years, 9 Fed chairs and countless board members have greatly benefited from the guidance and counsel of IF staff, and not just when responding to crisis. This team helps to assure that we're well prepared for our international engagements by providing us detailed, some might say extremely detailed, materials ahead of time, and often by traveling with us. IF staff are always welcome and productive companions in these and other endeavors. We benefit from the robust relationships that you establish and maintain with our global counterparts. So thank you to Beth Ann and to all the staff here that organized this wonderful event. And finally, thank you again to all the current and former IF staff for what you have done and continue to do to help us be a globally knowledgeable and responsive central bank so that we can deliver on our dual mandate for all Americans. Thank you very much.
Is that it? That's all they're going to give us? Well, hang on. Let me kill that music. We don't need that. Well, I guess the fact that he didn't have any surprises or anything, the intraday, SPY hit a new high, Q's hit a new high. As I said before, Broadcom's looking good, intraday a little flat. Meta's looking probably the best of the day, and the one that's looking the worst of the day is Tesla, so let's hope that could turn it around. But yeah, I see it in chat. That was a giant nothing burger, but maybe the fact that it was a nothing burger and we didn't have like some sort of negative surprise, that could very well be part of the reason why we're going up, but there was nothing new there. So folks, we're going to put a pin in it. Obviously, if you turn bullish just past the 10 a.m. hour, congrats to you, because the bulls are now clearly in control. That's what I have for you. We're seeing some higher highs. We're seeing some higher lows in the short term. And let's hope that we could get this daily chart breakout continuation to the upside. But if you haven't already, I will see you in the Discord. That's where we're going to go hang out for the rest of the day. And if you haven't already, don't forget to sign up for public. Use that link because you'll start off at a higher rebate tier. That's what I have for you, folks. I will catch you in the update video today, and then we'll be streaming once again tomorrow morning. I appreciate you guys stopping by. I appreciate all the good vibes. Peace.